Welcome to On the Edge, a show examining how deals actually happen in commercial real estate. Host Malcolm Davies, founder of Way Capital, speaks with professionals in development, investment, finance, and more for insights into how these business leaders get deals capitalized. Malcolm's career spans more than 20 years, during which time he has managed nearly $20 billion worth of financings. Now to your host, Malcolm.
Hi, everyone. Welcome to the next edition of On the Edge. I'm here with my great friend, Neville Rhone. And Neville joins us today from his office in LA. Neville, welcome to On the Edge.
Thank you for having me. Pleasure to be here.
So we're recording this right before kind of the holidays and just some housekeeping stuff. What are you going to be doing for the holidays?
I think checking to make sure that there are no leaks in the home, right? I think there's supposed to be massive rains in Los Angeles, for the next, several days. So in addition to that, just be spending a lot of time with family, and I'm pretty active. So, I'm back to the rain. I'm a little upset about the rain because it makes it harder to go out running and hiking and doing those things. But it'll be a lot of good time, indoors for sure.
It's amazing. Us, the Angelinos, we complain about the rain more than anybody, yes, I think, in the world. All right, so let's get into this. So, Neville, you and I have known each other, I think, probably now almost 15 years. You've had an amazing career. We're going to get into ARC and all the things that you're currently doing and the great company that you founded. Can you just give the audience a little bit of your personal background and story? Going from how did you get into private equity? How did you get into commercial real estate? Give us a little bit of background on your story of how you got here.
Sure. Well, I think the thing that I've always tried to do was, reflect on the path a little bit, right? But also when you're in the moment, be focused on where you're going and how do you feel, in that particular moment. And I would say that the way I ended up on this path, so, just kind of zooming out for a second, we have a middle market, private equity shop in real estate, where we're spending our time in the Sun Belt. And we're really thoughtful about how do we partner with those who want to, do good things with their partners and communities and otherwise. And so where did it all start? It started for me back in college. I was, Cornell engineering undergrad. And true story, I don't think I've shared it a whole lot, but, started out as a community service project where we looked to raise money in the community. We built a pretty complicated, highly designed playground for that, location. When I said raise money, we raised money from the school as well as others and, families, in the area. And, all of that took me from engineering in one lane to raising money, thinking about, how do you actually create something in the physical world? How do you motivate and build a team? All those things. And I was like 19 years old. So, when I kind of did that took me into a path of thinking about development, and ultimately finance after school. But it really started from back then, when I was a very, very long time ago.
Well, it's funny. You and I both talked about this. I think we're shocked at how much we're traveling still in our careers, and we don't think that that's ever going to go away. But one of the reasons why is that, right? I mean, the key is, right? This business is all about the relationships and trust. Talk about your life and connecting and being able to not only allocate capital, but how you've allocated to different partnerships over the years.
Mm-hmm. Yeah, well, you hit it on the head in terms of it really coming down to people and relationships. Back then, as a 19-year-old, I was building a relationship with folks who had no idea who I was and had any capabilities. And, but it came through just thinking through how do we solve something together, right?
Yeah.
When I graduated and I was at a developer called Tishman, and we were investing and developing hotels in everywhere from Poland to Puerto Rico. It was about sitting down with folks, and figuring, well, how do we solve this issue of building something and creating something? When I was at Morgan Stanley then at the time, and after business school, and you sit down to figure out, well, how do I solve the capital stack? How do I really think through how we're serving our clients, whether it be raising capital or investing capital? Mm-hmm. And again, very personal, as much as we went from, and I'm going to date myself. I mean, we went from basically email, right? That was
Yep.
new, by the way.
Yeah.
Like it was like newfangled technology when I started out, decades ago, and to where we're progressing today, and the speed of information transfer, so the access to information is great, but it still comes down to sitting down and talking through how do you navigate where we are today. Sort of building upon these elements over time, it came down to being thoughtful and being more of a listener in all these conversations to figure out how do we get there. And I can just keep going. I mean, as I think about this at Canyon, spending time at Canyon,
Sure.
right, and thinking about, well, we're investing and deploying hedge fund capital, institutional capital into places where there's a mispricing because of misperception of opportunities. That's a conversation, with the counterparties in the deal, right? And informing ARC, for us, it was really again about, well, how do we, in a way, provide that interpersonal, right, solution-oriented approach to the middle market, because it's harder to do it in the middle market where it's very fragmented, right?
Yes.
So can we be a solution in that world, right, versus the spaces where the Brookfields and Oak Trees will focus much larger, versus the small family offices and what they can do that's more simple. And what it comes back down to is relationships, right? And sitting down live to talk through how you get there. And we have all kinds of tech, and AI is awesome, and Excel is great versus Lotus 1, 2, 3. Do you know what that is, by the way? I can attest you on that one.
I know. Neville, we're close enough, my friend.
That's right. Okay, so you got it.
By the way, how about this?
Inside joke.
That's right, exactly. So how about this? There used to be a moment in time where you would call somebody and they would say, oh, he or she's out of the office. We'll give you a call back in a week. And it was okay. Like that was a normal thing, that it took a week to call somebody back. Today, that would be considered quite rude.
True.
And so, the one thing that I would love to get your perspective on, and really can't wait to get into the middle market discussion, because I think this is really where you guys just excel, which is amazing to see. And I love the growth that you've had over the years. But just the speed for which things get done, and how the change of commercial real estate, which is a very slow moving kind of industry in some sense, but is moving faster and faster. But the one dynamic that's not going to change is really how important it is for people to make decisions together, and the relationships and that trust. How do you see us speeding up here, going forward? Because it does seem that while we went from, leaving message on a phone call to an email, because, I do remember that started. And then all of a sudden it goes from, email to texting, and then goes from texting to, doing Zooms and things of that nature. Walk me through how you guys see this.
Yeah, well, I think we are always, let's just say, we try to, act fast but think slow, right?
Love that.
And so, what that means is that we spend a lot of time building relationships, understanding neighborhoods, thinking through sectors. So we have a view, and that's a slow process, right? That's just sort of the built up, I will say, experience / scar tissue, right? From understanding what can happen and go well and what can go wrong, right? And so having that, sort of in our system, team of 14 people, a lot of experience. I'm going to try to stop doing the math, but I've been at this with, co-founder Quincy in terms of our careers for like 30 years, right? And so long as you're listening overall and building on that wisdom, you can act pretty quickly if you've already thought slowly about where you stand in certain, opportunities. And so that's really it. And so if we hold to that, what folks value with us is that they're talking to the decision makers, and we get back to them like that.
Yeah.
Right. And whether it be, we usually say no and, right? No, and here's how we get to a yes. Right.
Love it.
It's
the question, it's the age-old sales question. What would have to happen for you to do this?
Right.
right?
Exactly.
So
Exactly.
tell us about obviously you and Quincy spent many years at Canyon, which were the years where I got a chance to meet you guys before you started ARC. Tell us how ARC is positioned in the world today, why
Mm-hmm.
you started ARC, and really where you capitalize in this middle market space.
So Quincy and I probably, did something like $4 billion of transactions
Wow.
at Canyon back in the day. And what was becoming clear was that, just sort of I would say the barbell effect, right, of the composition of those who invest in real estate was sort of bifurcating, right? You had the very, very big players and the sharpshooters happening.
Yes.
And so when we said, let's take the 50 deals, investments, in our careers up to even including beyond Canyon, and just were honest about where we saw great opportunities and sort of, I would say, less volatility around outcome, right, in terms of return, and less risk, right?
Yeah.
So for a sustainable, repeatable, right, strategy. And we saw that the middle market transactions were the ones where we just were able to take on less risk and get to better return. Very simple.
Amazing.
And when we saw that, we said, well, if we could be a nimble team where folks can get straight to the owners of the company right away, where hopefully they pick the right spots, they're good tailwinds over time, not all the time, but over time, and spend time where the fragmentation, the pain in the butt, call it process, is something of a feature of how you're able to extract a better opportunity for your investors and who you're working with. That's an interesting place to play, and there's a lot of that work. When you kind of take a step back, there are probably today 4,000 companies roughly that are public, and trading right now. Right?
Sure.
There are probably, there's just 3,000 properties that traded in the last 5 years that are larger than $10 million, lower than $100 million.
Yes.
Right. So you have the same number of assets, right, that have nobody going after it with the same scale and volume that they do for the public markets.
Yeah.
Right. And so if you think, well, okay, let's think through the numbers. And well, that means that if we spend our time, in the middle market, there's more of I call a stock picking, expertise that comes to what you spend your time on. And in this day and age, when unfortunately, let's be blunt, real estate has been going through a capital markets, upheaval to say the least. In the worst of the cycle, if we can find the best assets, the best partners, and also navigate how to solve the gap, that's pretty interesting in the middle market. And so that was sort of the genesis of how we started out. And, we started out, saying we love MMA, right? And to us, MMA is middle market alpha. That was always our governing principle, whether it be capital stack or pricing or otherwise. If we could drive that alpha, that's interesting, for us, and is actually a great solution for operators and partners too, who are looking for, capital to grow their businesses.
I'm going to remember that. I'm going to write that down. MMA was that. That's a good acronym. So what are look, couple things. One, you and I both went through the GFC, which was an incredibly violent crash and world implosion, and meaning that asset values appreciated 30, 40, 50, 60, some 70%. This cycle has been a bit different, more interest rate volatility, very slow, kind of up and down, fragmented, choppy. But yet, you and I sit, and it's 2026 in a few days. And what's amazing about that is it's going to be nearly 4.5, 5 years of choppiness that we've been dealing with, which is much longer, really, than the recovery cycle that started when the GFC. How has ARC looked at this, and how have you been, thriving within a very difficult environment?
Yeah, it's a good question, and something that we navigate all the time. I think for us, this is a space where I would say our expertise comes more into play, because today the given operator developer, GP, is looking for recapitalization capital, right?
Yes.
They're looking for cash in refinancings. They're looking to pay off LPs that are now, 5 to 7 years in,
Yep.
still, sort of holding on for hope. I mean, LPs are like, I'm done, right?
Yeah.
And so this is an interesting time for us because we're agnostic, right? We're
Yeah.
happy to come in to an existing partnership, clean it up, and then sort of create a stable, structure for hopefully this next 3 to 5 year cycle, thereafter. And so because of that, in some respects, that was so much more on the menu today, and it was not really much on the menu, 5 years ago,
Yeah. I mean,
right?
look.
And so
Yeah.
that's a kind of actually quite helpful for how we look at the world.
I mean, look, you can sit here in 2026 and realize how long you've had to hold on
Exactly.
as an equity investor in a commercial real estate deal. And it doesn't make sense, candidly, for many of them to
Hmm.
continue to hold on, inclusive of lenders, too. I mean, as we've
Right.
known, we've been doing extend and pretend for a long time. So let's unpack that a bit. So what's really interesting here is that you've got these partnerships that are starved for new capital or capital. And in reality is those new partnerships will likely have to reset basis if they want to continue moving forward with an arc of the world coming in. Where are you doing this at, and what markets, asset classes?
Mhm.
What does that profile size wise kind of look
Sure.
like? Let's get into that a little bit.
Of course. Yeah. So good question. So in terms of investment amount and what we like to put into an opportunity, it's anywhere from $10 million dollars on the low end up to
Yep.
call it 30, $40 million on the high end in
Yep.
that zip code, right? I want to pick on it again, but the folks at Blackstone, Oaktree, Brookfield, Rockpoint, I can go on and on. They can't invest anything less than really $100 million of equity, right?
Yeah.
So,
Yeah.
awesome
Yep.
rarefied air that works pretty well, but we're
Sure.
focused on a space that is fragmented and doesn't get met. So that's kind of the size range in terms of where we spend our time regionally. We're big believers in paying attention to demographics,
Yes.
where jobs are growing, income's growing, population is growing, and the composition of all three changing as well. So where are the inflection points happening? Our view is that most of that is in the Sun Belt.
Yep.
And so we're spending our time there. Sun Belt being, and the biggest, I would say the concentrations, for us, candidly, is in Texas and in
Sure.
California, right?
Yeah.
We have an office in Austin, Texas, in addition to our office here in LA, and we're thoughtful about where we spend our time because it's just sort of you can't really get in front of demographics and ignore it, right? So that's the other piece, just where we are regionally. And then in terms of asset class, we've picked 3 of the 28 different subsectors of real estate.
I love
Right?
it. I
Just
love
3.
it. Yeah, let's get into that.
It's true. I mean, so we're attainable housing,
Yep.
which is market affordable for the college grad, right?
Yep.
So recently minted, entry level, from any sector, nurses, media, otherwise, right? So that's kind of one. 2 is necessity retail, so that anchors to grocery and community convenience, right? Kind of
Sure.
that's the second one. And then lastly, really we're leaning in and looking at advanced manufacturing, which
Yeah.
tends to be smaller scale, more infill, and ultimately with the reshoring and the reality of also paying attention to your supply chain and building more here, regardless of your political background, is also another space we're spending our time in. So that's really it. We look outside of that, but those are the 3 property types: investment size I mentioned earlier, and then regionally, we're looking at the Sun Belt as a whole.
And do you come in to all of your opportunities as either a co-GP and LP, or do you ever take on opportunities where you are just the main sponsor with your capital? How do you actually think about structure on
Hmm.
these opportunities? And I'm assuming, so I'll ask a question after that, but maybe if you could answer that one first.
Sure. Yeah. So I think, today, candidly, the majority of what we'll be doing today would be in structured equity, pref
Yep.
equity, co-GP at times, joint venture, what have you, but with structure to it. So that's going to be, call it 80% of the book, right?
Yep.
The other 20, yes, we'll look at opportunities on a case by case basis. We are the sponsor. We know how to do it. We've done it before.
Sure.
and sort of taking that first loss risk. But typically, it's more driven by kind of an anomaly, repricing.
Sure.
So you're feeling like you're getting a sort of a, call it core plus risk, but value add return situation. There's not much in the way of the heavy lift at the asset level, right? And so you're really focused on leasing, mark to market as a way of getting to
Yep.
value because something broke in the capital markets at that point in time.
So a question I have for you on this is that, okay, so these are the three asset types, the locations and the like. Obviously you're not taking development exposure as a
Not
component.
really.
Yep, that's a good one. The source of your capital and your ability to make decisions. So, how do you? Is there an investment committee? Do you have to go back to? I mean, is it just you say, hey, we're going to do this? Walk me through if a sponsor's in a deal and they're thinking about doing something like this right now. How do you? How does that the decision making tree occur?
Sure. Good question. So are you talking to a co-founder of the firm?
Yep.
You're talking to 1/3 of investment committee. So there's three of us in investment committee, and Quincy Allen being one, and then
Yep.
Brad Weinberg being the other.
Yep.
And with respect to our capital, it's discretionary. And so
Yep.
we have fundraised and deploying that capital in a manner that allows us to speak with certainty and also with speed, right? And with no bureaucracy and the things that you run into with the much larger, players out there. And that's sort of our edge, right?
Oh yeah.
We do all the documentation, we do all the hard work of, making sure that everything is lined up in terms of, the way that a deal is built. But we do operate as basically a handshake, right? If you're good with us, all right, and we have terms set over a handshake, we'll get there so long as all is advertised and you have a commitment from us pretty quickly because we're very involved at the IC level.
And I think that's one of the huge advantages for ARC and finding opportunities is that, you don't have this bureaucracy. You don't have this concept of, well, I think it's going to be approved, right? You have a good connection with the sponsorship group and they know they're connected with the decision makers. And frankly, yourself, Quincy and Brad, you're talking to post-closing. You are the people that your sponsors are talking to, which leads me to a question, which is, what do you look for in those sponsorship groups? What are, is it, just kind of give me the profile of how you make, is it a gut check? Is it a gut feel? Obviously their reputation, track record, background. How do you make that decision?
Yeah, good question. I think I'm going to get away from all the table stakes answers like integrity and capabilities and all that kind of stuff. Everyone does that. So, but to me, I would say what I look for is, two things, and this kind of applies to our team as well as I say this, but attention to detail.
Yep.
Right. And that's easy to figure out pretty quickly. Do you really know what you're talking about? Are you here or you're down here in the details?
Yeah.
And the other is, sort of this indelible need to know the answer, that curiosity.
Yeah.
Right. That intense curiosity as well, kind of the second major thing. And then there is this X factor around that relentless ability to get things done. That's sort of
amazing.
A bit more art science to it. In addition to all the other things that people always say about, track record and things like that. And but those are the three elements I'd say.
I love the curiosity comment, and there's no question. So when I was younger, and everyone always said you should just do what you love, and I never really understood what the heck they were talking about. Really, what it is that you, if you love what you do, you will dig deeper, you'll dive deeper, you'll never give up. Your competitive skills and nature will just constantly strive to win. And that's what you got to find folks that love this. Don't just like it; they love it because it gets you through the hard times.
Yeah, exactly. Yeah, I mean, I think the thing that's always interesting about do what you love, there's nothing that's worth anything that's easy, right?
No.
Right? I mean, if you win, a competition, it's a grind, right? And you're spending hours and hours and hours in the dark trying to get there, to train to get there. That's not fun. You don't love that. Nobody loves that, right?
No.
But it's the process as a whole that drives you and the energy it gives you going through those hard efforts to get there. And that kind of relentless energy is what we look for.
You wouldn't. It's not reward. It would not nearly be as rewarding if it was easy. Which leads me to a question that I think is important. We raise capital for a living, of course, and so I go around the country like you do, and like we've said before, we live on airplanes, and we talk about deals in places. We know that in California, it's gotten better, but it was a challenge convincing your capital partners or to convince folks about doing a particular deal, particularly as it relates to attainable housing. There's some laws, rules, and the like in California that are very strict and more difficult. Not landlord friendly. Best non-political way of saying that. How do you look at California, and how do you see almost what I believe is going to be this huge swing back to California because of look, we are the fourth largest economy in the world, and the like. Talk about how you guys see California in general.
Yeah, I mean, I think there's no question challenges, but opportunities here in our state. And I think that political leadership, business community are more thinking through how do we approach the world with the lens of abundance, right, versus scarcity. That's just happening. I just see it happening. And so that I think is a good tailwind. But you mentioned it, right? To be the fourth largest economy on earth and the capital intensity that's here and the international diversity that's here is a real engine for the long term that, at some point, so like it's physics, right? It's like the gravity, follows mass, right? And
Absolutely.
The mass and intensity of what's here is hard to ignore. And so with that, we pick our spots. Right.
Yeah.
We just invested in a recapitalization of a grocery anchored center in Marietta, California.
Love it.
Where great, cap rate going in, fantastic partner that wanted to be able to stay in the deal longer that we worked with in order to do it. And, they've done a lot of hard, good work. They bought the property, invested, improved it, re-merchandised it. And because this neighborhood in this area, I should say, this region has been going through, a consistent growth, right, in the population and incomes in that area, it's done well to match that, revitalization overall. But we couldn't do this deal that easily in Texas, right?
Yeah. But by the way, we just did a big equity check on a 150 unit apartments just down the street from Marietta in Wildemar. So I think you're
really
right.
Nice.
There you go. But that being said, let's get into it. I mean, Texas is just an engine in its own right. So I think just in general, being involved in these bigger markets and being able to, ultimately capitalize and the recapitalization that you're doing really does allow the sponsors who have put so much time and energy into something to live to fight for the recovery. Mm-hmm. That's really what I think the big strategy of yours is today. And, the fact that there is an opportunity to do that versus, either sell the asset, take a big loss today, which, inherently is likely we have to right size anyway investments. Right. And that's what's happening. I don't know any sponsor that's feeling great about their entire portfolio, but I think just in general, the strategy you have to be that quote unquote, recapitalization has been a great one for you guys. And I think for the groups that are involved with you, how does someone think about this in the way that they would approach ARC? I mean, obviously it would come through advisory companies like Way or others, but what are the ways that you're seeing deal flow come to you?
Good. Well, I mean, folks like yourself, of course, right? I mean, you've always been good to us and making us connected, which is important, right? And then ultimately, the flywheel effect also works too, because we've been in some of these areas for decades now. And so the networking effect and the flywheel of, those that know us, approach us, right? So that's sort of the way that we've been able to navigate. And it's, you hinted at it earlier. There's a reason why we're always traveling. Right?
As much as I love doing this on a Zoom with each other, the reality is it's a lot better for you and I to meet and talk in person because you really can kind of get the message, feelings, and the like. That's never going away, particularly in our business, where not just $1 million on the line, but multiple tens and tens and tens, hundreds of millions of dollars are on the line. You don't make a decision like that without a lot of thought. There is that theory, right, where you likely won't do something unless you know somebody and met them 5 separate times. You know, there's one of those things. So I always
my number is 11. It's 11 actually.
It's 11. Wow. That means I got to work real hard with our groups that we get. Yeah. All right. So what is we always try to end them with a fun fact. So Neville, what's a fun fact about you that most people might not know if they met you and they'd go, wow, okay, what was it? That was interesting.
Oh, wow. Let's see. I got to try to edit this somehow. Let's think. I would say that I was just telling the story earlier, and not a whole lot know about this, but so first marathon did in here in LA actually.
Cool.
And this was a year where it was torrential rains. It was freezing. The rain was horizontal. It was like it could be not even worse. The worst environment of all time, and so what was pretty funny about it, and my kids won't think this, but they came out to go and cheer me on, right? And because it was raining so much, they couldn't wait for me at the finish line. They went to get cover, and then I didn't see them finish, right? And so the younger version of me would have been pretty upset because they didn't see me finish. But the mature version of me was like, you know what? It's amazing they came out to support me, and they had to sort of figure out a way of being there. And so what people don't know about me that much, because I'm pretty much a hard driver, is that actually I do have a soft spot in my heart, for when people show up. And so I treated everyone to staying in a very cool hotel, right? That evening, that weekend after getting it done, because they showed up even though they didn't see me finish.
Amazing. What year was that one too, by the way? That was
Let's think about this. I think it might have been 2010.
2010?
2010, I think. Yeah.
I did the LA Marathon in 2018. I will agree with you, a very difficult thing to do. So congratulations on achieving a goal of a marathon completion. I'm assuming I can for sure you were faster than me because I'm one big old human being. But
I don't know about that.
Oh man, Neville, this is amazing, and I can't thank you enough for spending time with us on the edge. How commercial real estate deals really get done, because the middle market is where the entrepreneurs are, and it's really where an amazing opportunity is for everybody that's involved in it. So, thank you for spending time with us today, and happy holidays to you and your family, and enjoy the time off.
Thank you for taking a little time with me here, and have a great holiday as well. It's great catching up.
Absolutely. Bye, Neville.
Take care.
Thanks for taking the time to tune into our latest show. As always, you can find us through our YouTube channel at youtube.com/@wayontheedge or at our website at www.waycapital.com. Until next time, keep working on the edge.